Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 30,196, down 4.3%. Ethereum trading at 1752, down 7.08%. If you're new to the channel, I'd just like to let you know that everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time crypto trader. My goal is to assist you to be more of a financial blessing to yourself and those you love. I've been trading for many decades. I create these rules and share them with the community to help them to be more of a financial blessing to themselves and those they love. Rule 312, distrust your gut feelings. That is, do not trust your gut feelings. But what does it mean? When people get into the market, they're generally pulled in by their gut feelings. This is going up and up and up. It can't go down. Buy the dip. It's fantastic. It's going up and up and up. And traditionally, people that are advertised into the market tend to buy around the top. That's not your fault. If you're in that situation at the moment, the system is designed that way. Just think about this. When you were buying up and up and up, someone was selling. This is a critical thing to understand. When you buy, who sells? Now, what are people feeling at the moment? They're feeling really despondent. They're feeling angry. They're feeling frustrated. And they're feeling a degree of financial terror. That's also part of the system. Just think about it like this. When you sell, who buys? The answer, the people that sold here when you bought are the people that buy down here when you sell. Now, why is that the case? You may have heard of the very common statement, don't buy a falling knife. Who gave you that statement? The same people that said that you were to get into the market at these high prices? They are the same ones that refuse to give you the correct advice. Now, what does that mean? Can I prove it? When prices fall dramatically, they can increase disproportionately as well. If price at this level currently just comes back to its all-time high, what it was before this sell-off, that increase will be 112.55%. So many investors and traders do not know this rule, and I can understand it because institutions tell you don't buy the falling knife. Why? Because they are. Rule 171 is really important. When in doubt, zoom out. If we look across Bitcoin returns, for example, Bitcoin, gold, the S&P 500, and we look at the CAGR, compound annual growth rate, we see some really interesting things. Bitcoin has tended to perform quite well compared to, for example, gold and compared to the S&P 500. When people see those mouth-watering returns, and they're just incredible, especially compared to the returns you can get in banks, they say, wow, it's risk-free. It's just going to go up and up and up. Unfortunately, that's just not true. Crypto is incredibly volatile. Have a look here, just at this little part of the 2016 halving cycle. Price went up and then came down and then marched higher. This is an exponential chart. This is a log chart. This price is going up exponentially higher. It's creating a blow-off top. Now, people in crypto think it's very much like the stock market, and they come up with all sorts of analysis, head and shoulder patterns, and those kind of patterns don't really apply in crypto. Let's zoom in here, this particular part of the 2016 cycle. I want to show you just how volatile crypto is. You already know crypto's made incredible gains since that particular cycle. And it may be helpful to know that this particular drawdown was around 85%. And that's common in bear markets. So it's really important that we figure out where the bear market lows could be and project them. Now, just zooming into that particular part of the 2016 halving cycle, there's more information on this in episode 129. When that falling knife came down, of course, retail hands would say, don't buy the falling knife, don't buy the falling knife, and they all exit. Now, what happens? They sell at the bottom. Price rallied over just 3 days, 60.55%. This is the exponential nature of crypto. Crypto is a dangerous thing to trade and invest in. If you have a long-term horizon, you're sitting pretty. But understand from a day-to-day perspective, it's really violent. Even look at this, even when it got above this previous peak here, it came up from like $3,000 to over $4,800. Look, it whipsawed back to 3,000 and then it continued its leg up. This is common behavior in crypto. It's really important to anticipate it, to be comfortable with it. I know a lot of people are not comfortable with this, and I don't blame them at all. It's really, really violent stuff. Rule 315, let the fire forge you. This is a rule just as much in life as it is in the markets. We're always coming under fire. In your personal life, you can get sick. You can get fired from your job. You can suffer illnesses. You can have relationship breakdowns. If you're a parent, maybe your kids aren't talking to you. All sorts of fires occur in our life. I would like to say, let the fire forge you. It's really, really vital that it does. Why is it vital? That fire is there to make you stronger. There's a really old saying, nothing is given to you that you cannot handle. Whatever fire is in your life, it's meant to forge you, never to break you. Right now, many people are going through the fire of losses. It's really hard to deal with, and I do understand how people can get really angry and upset. It's totally understandable. I guess that's where Rule 317 comes in. No matter what, be kind. Yes, of course, we all have bad days at work. We go home and kick the dog. Well, that's not very nice. That's not very kind. The dog didn't deserve it. We can do that same thing with people. We're upset. We lash out. We don't realize we're lashing out, but we do. It's normal. It's part of human psychology. But when fire forges you, you become much more resistant to lashing out. You generally become a lot kinder as well. We have a really beautiful community filled with incredibly good people, incredibly kind, intelligent, and very, very decent. I think that when people are in pain, it's always good to understand that they're just in pain and not add to that pain. Try and do the understanding side of things because it makes a lot of sense. We've all been in pain. If people understand us, that is much nicer. I would just suggest that across the groups, just be kind to each other. Everybody understands that this market is so stressful, but realistically, if you just put out what you need to discuss in a kind manner, you will find that whatever you want to be addressed is addressed. It's the way to go. Let's get into the T-cube method, trend, timing, and trigger, Rule 174. In this episode, we need to test how the trend of Bitcoin, because we know Bitcoin rules the crypto market, how is that trend going? If it is going A-OK, there's no cause for concern. But if it's changing, yes, we need to be concerned. So let's check it out. On this channel, we use the KS process to determine the true trend. We look back at the fundamental drivers behind adoption. This cryptocurrency is the new internet. It is the internet of value. It's growing far more strongly than the internet grew. With that in mind, we're feeling comfortable. A lot of discontinuous innovation and invention is coming. We also know that we're very early on in the internet adoption. The number of blockchain wallets currently is 74.74 million. We can see we have a long way to go till we hit internet penetration, and this is just 2019 data. We look across the KS model to see the overall growth. Now, when we notice this price behavior, it's very much to do with the liquidity blow-off, the China miner exodus, and there was a death cross as well. What is happening here is we're just normalizing price action. Institutions have a field day with retail investors. They know that retail investors get very scared out of positions. That's why they are always playing with psychology. This is a crypto technical trading model based on institutional price psychology. When we go through and look at this process, it's really important to compare the sunshine of the bull market to the sunshine of the bull market to the sunshine of the bull market. Now, why do I say it's sunshine? On a day like today with so much red in the market, how could it be sunshine? It's sunshine to institutions, not to retail investors. Sunshine means that there is a strong confidence in upward price momentum. People still talk about, well, it's going to go to 100,000 at the minimum. Actually, the minimum price that Bitcoin should reach is $132,418 as an absolute minimum. A lot of people can't see that right now. They're stuck in the redness of this day. That's why we need to zoom out. It's really, really vital. We always use rule 181, compare same psychologies. That's compare sunlight to sunlight to sunlight, not sunlight to darkness. If we cross the psychology, it means we're crossing the psychology of the underpinning cycle, which means we create comparisons that don't realistically exist. When massive sell-offs occur, when we've reached the peak of the market, we see an incredible number of transfers to exchanges across all exchanges. You see this exponential blow up here. Notice what's happening right now. Even Bitcoin is currently trading at 29,632. What's happening? We're not getting this spike. That should give you a lot of confidence. It's just a short-term bottoming. I'll just take you across this Bitcoin investor tool. You'll notice this purplish band, dotted band, 1, 2, 3. You see it connecting the peaks, 4. We are a long way off a peak. We're in fact just above that particular line. That shows that we're very, very early. We've just had potentially the easiest way to understand this, with the China miners shutting down, doing the exodus from China, and mainly a lot of them are setting up in Texas at the moment, which is very good for the Texas economy. We had a reduction in hash rate. We also had a blowout in long liquidity. So many positions were long and they got blown out of the market. All that's happened is we've normalized the price back so we can continue on a healthy way. I believe that this dip is nothing more than just shaking out the last remnants of people who don't understand the cycle of Bitcoin. That's why we do so much analysis. We need to triangulate everything as much as we can. Bitcoin net unrealized profit and loss, NUPL, we've seen we haven't had the euphoria, we haven't had capitulation in this cycle. We always compare like cycles, so the 2016 cycle, halving cycle, going back to the 2012 halving cycle, 2 tops here. I'm looking for 2 tops in this current cycle. I think it would be more than appropriate, given the current price action. Let's look at Bitcoin realized cap hodl waves. We've got 1 peak, here. Each cycle has 3. Now, a lot of people say, well, it doesn't need to have 3. We always go with the trend. If you don't go with the trend, you will cost yourself incredible amounts of money. If we look at the Puel multiple, we can see it's recovering here. That's very healthy. And we still see it has a long way to go before it gets up into this red zone, comparing it to past cycles. If we look at the Bitcoin hash ribbon, we got a lot of problems with hash rate because the Chinese economy, the Chinese government wanted its digital yuan to be the ruling currency, and it didn't want anything to compete with it, which is fine. I think it's the most incredible thing to happen to crypto is that the miners are coming out of China. That secures the world's economy in so many ways. If we look at this particular hash here on 3, we can see that previous hashes were a long way before the peak. You can see this clean air here before the peak and clean air after the peak. It's really important to understand clean air after the peak. That's the 2012 halving cycle. 2016 halving cycle, clean air before the peak, clean air after the peak. What we're looking at is clean air before the peak of this cycle. So what's happening to stable coins? Are they flowing in or away from Bitcoin? We look at the Bitcoin stablecoin supply ratio, SSR oscillator. We can see that Bitcoin is witnessing an inflow of stable coins to Bitcoin, just like it did here. When those inflows come in, price is bid up. This is exactly what the on-chain data is telling us. Remember, emotions mislead always. Really be very careful of your emotional state. If you're trusting your gut feelings, you've probably witnessed that you buy at the top and sell at the bottom. The only thing that you can do is work towards a probabilistic stance. We're accumulating probabilities, not feelings here. All markets are interdependent. Rule 193, check the stock markets. The critical thing in the stock markets is where they are in the business cycle. We can see here the US, the world's largest economy, is early phase recovery. And that's pretty much echoed throughout all the developing economies as well. There, of course, is concern over COVID cases, especially the more infectious Delta strain. People are starting to use it as a reason for prices going up and down. So what do? We absolutely check it. We make sure that things are doing what the newspapers say that they are doing. If you would like to get this data, this is from worldometers.info/coronavirus. We can see there are definitely new cases. This is updated daily. We will make sure that we track this every day because we always want to confirm what the press is saying is actually correct or if it's just convenient. In the past 24 hours, there's been 417,392 new COVID cases. Many people think that COVID is over. It's never been over. It's always been under the hood, just bubbling away. I think a lot of governments tell people not to worry. I think they'd be more responsible if they told people to actually worry and take more care. We certainly don't want this thing just perpetuating itself ad infinitum. We look at the US market because it's such a big slice of the global stock market value. You can see it literally dwarfs Japan and China, UK, France. A lot of economic commentators and market commentators, financial commentators, will say all sorts of things about correlations between different variables. I learnt a long time ago to disregard what any expert says and do my own research. You can see Bitcoin here is this gold line, and this blue line is the 10-year break-even inflation rate. You can see inflation has created support at this line and is going up. Let's look at the 5-year break-even inflation rate. You can see that passed over resistance, it's been turned to support, and there is support upwards here as well. You might notice the correlation between break-even inflation in general, and Bitcoin. We're not saying that this is a causal relationship, we're just noting there is a relationship. We can see the 5-year forward inflation expectation rate is decreasing. Jerome Powell said that the Federal Reserve, expects inflation to be passing. This is reflected in this particular chart, but we keep our eye on it every day. Let's look at interest rates, another critical driver. What do we notice with interest rates? There's very interesting correlation here, isn't there, between Bitcoin and interest rates. This is on the 10-year Treasury note. We can see that resistance is upholding itself. Now, let's go through the main markets. You'll be hearing a lot of financial commentators saying the end of the world is coming. I pointed this out about 5 days ago, or maybe 6 days ago, that I expected the price would come down, hit this line of support, this is the NASDAQ 100, and then just rebound on its merry way. It doesn't necessarily have to follow this line. I was just saying this is what I believe it is potentially going to do. So far, so good. That line has been holding up rather well. But I do expect things to wobble around a bit. It's all probabilistic, and I'm not doing crystal ball gazing with that particular line, just pointing out something on a chart. I think it's really good to notice that when the market sold off, Bitcoin rallied up to the top, and then it's been coming down. So there's a clear divergence between the stock market and Bitcoin. At Bitcoin, 50% off plus, it's a really, really good buy for institutions and high net worth individuals. People will look at that and say, yeah, I want to buy that falling knife, because they understand a movement from 10 to 5, maybe 50% down, but a move back from 5 to 10 is 100%. I just want to sum up all these charts. So Refinitiv has estimated that earnings quarter on quarter will increase by around 65.8% across the markets. The Federal Reserve Chairman, Jerome Powell, said there will not be any tapering. They're not going to stop the money printers from going burr. He expects inflation to be temporary. Over the coming months, it will exist. He says they're a long way from fixing unemployment. They will be continuing economic support, and there's no change in policy stance. So what does that mean? This is nothing more than a natural wave back. If these fundamentals change, we could have something deeper to talk about. The Senate Democrats are also proposing a $3.5 trillion spending bill. That's pretty positive for the markets. Stimulus is good for the markets and good for Bitcoin. Oil, there's been an unwinding of long positions because OPEC is increasing crude production by 400,000 barrels per day starting in August 21. The important thing to note is that the market commentators have a bucket of reasons for explaining why price goes up and down on a daily basis. Negative reasons. I'm not saying the reasons are wrong. I'm saying I can see they whipsaw between reasons. It's like they pick one reason and talk about it. For example, negative reasons, COVID Delta strain. That's why we're now tracking COVID. Inflation, we're tracking inflation. Interest rates, we're tracking interest rates. Slow economic growth, we're tracking that. These are negative reasons to try to explain to the public why something went down. Positive reasons, vaccinations, deflation, stimulus, low rates, improved global growth. It's interesting that they will just pick one of these or two of these. If the stock market comes up tomorrow, they'll just say vaccinations are working. It's just incredible. I've seen it over decades. I always say the news is very misleading. Let's have a look at the S&P 500. We know what's happening. We know the drivers. Look at this divergence between Bitcoin and the S&P 500. Let's have a look at the Russell 2000. That's definitely a breakdown. As we would expect, when the NASDAQ retraces, that's going to happen. It's going to come down as well. Let's have a look at the Dow Jones. Dow Jones is retracing within support at the moment, but definitely retracing. I've just done a little bit of revenue tracking here. This is annual revenue. This is quarterly revenue. I think it's really interesting to see this kind of data. I'm always seeking to give you more and more and more insight. We know price moves in waves. We've had a wave up. What's going to happen? We're going to have a wave down. It's just normal. Bitcoin has had a wave down. What's it going to do? Have a wave up. But it's going to terrify a lot of people on the down and up waves. Let's have a look at Amazon. Amazon is got above that particular resistance and now retesting it. Let's have a look at Apple. Apple charged above that resistance, now retracing. If the major indices retrace, we expect that across the board. It's just basically the way it goes. Netflix, we can see that resistance, once resistance turned to support and being retested as support. Let's have a look at Google. Yeah, doing very well, still clean air above support. Microsoft retracing. Now we get into the Bitcoin side of things. All of our analysis on the stock market is from a Bitcoin perspective, a cryptocurrency perspective. We see weakness here, definitely. It's really echoing the 2016 shakeout at the moment. Grayscale Bitcoin Trust, very close to its resistance line, not a long way away. It hasn't wicked down like this, it's very close. Let's have a look at MicroStrategy. MicroStrategy, weakness, but there's a fair bit of support in this band. Galaxy Digital, weakness. We expect weakness. This is the nature. If something's trading in the stock market, it will experience weakness. If the major indices experience weakness as well. Tesla, holding support. Let's have a look at CoinShares, physical Bitcoin, just at resistance. Let's have a look at Voyager Digital. It's breaking away from that resistance line. Purpose Bitcoin ETF, quite close to its resistance. Square, holding that support line. It's very interesting. Square, Q1 2021, 5.06 billion. For last year, 9.5 billion. Well done, Square. Let's have a look at Marathon Digital Holdings. We can see, look at this, Q1 2021, 9.15 million. Annual revenue 2020, 4.36 million. It's really important to understand how the stock market works. It is earnings driven. Greater earnings, greater return. Very important to understand that. Having a look at Marathon Digital, it's shown weakness, just recovering a little bit. Coinbase Global, again, showing weakness, but recovering slightly. Let's have a look at Bitcoin Group. We can see some pretty substantial weakness here. Having a look at QBTC, the Bitcoin fund in Canada, holding that resistance. ARK Innovation ETF, little bit of a breakdown here, but holding up. Had a little bit of a late rally. ARKW, Next Generation Internet ETF, responding like ARKK. Let's have a look at Silvergate Capital. You can see these Bitcoin related stocks are very similar in what they do. And you'll also see that when Bitcoin recovers, they recover. This is why it's really good to keep an eye on things. Let's have a look at Hive blockchain. Hive with the weakness. Let's have a look at Riot. They're all indicating basically the same thing, but they are coming up to support. Let's have a look at Bitfarms. Sold off. And Argo blockchain, still on the way up. A higher low appearing there. We're always looking for particular black swan events, flights to safety. Let's have a look at gold, see how gold is responding. Gold was over this resistance, turned it into support, failed, came back on this is a high too, but this is a lower high. So it's just seeking to retest this support to resume up again. We'll just keep our eye on it. Silver showing weakness, but down to this support line. The VIX, big spike in fear. Of course, like everybody's expecting that the stocks that will not ever retrace. It's just pure fantasy. Price is always moving in a wave. It's always going up and down. We just acknowledge that. That's just the way of the world. We look at the dollar. Dollar got over this particular resistance and it's above. That's now support. A lot of people say that the dollar moves inversely to Bitcoin. For example, as the dollar goes up, Bitcoin goes up. Hang on a second, that's a direct relationship. Well, when the dollar goes down, Bitcoin goes down. That's still a direct relationship. Now, we're seeing the dollar strengthen here. Typically, that is actually quite positive for Bitcoin, even though a lot of people say it's not. Let's have a look at Treasury bonds. They're increasing. Let's have a look at yields, inverse relationship. We would expect that to be selling off, and it is 10-year note and 30-year as well. Transportation. This is important in my eyes. The transportation ETF breaking this particular support gives some credence to the COVID crisis idea, which we are now tracking. We'll keep our eye on this. Let's have a look at utilities, also another highly defensive sector. We've seen a massive sell-off here. That's really a rejection from that resistance, but it wasn't pushing hard above it. That gives us cause for, I guess, a little bit of celebration because the utilities are highly defensive. When we talk about stock rotation, that's when they tend to rotate. We have a look at airlines. It's got this weakness. Let's have a look at the Brent oil futures. We see weakness, but we know why. They've curtailed production. Let's look at light crude oil. Same thing. They're talking about the longs covering, basically, that it's pretty much gone as long as the longs think, but that could be just news. It's really important to dig as deeply as we can to get any data that substantiates one position or another. If you've been following the channel for any period of time, when you look at a market like this, I hope you look at the market like I do. This deep red is exciting. It's exactly what you want. The more something decreases, the more the percentage increase that follows. We always let price come to us. We don't chase price. We buy at support. We understand prices are negatively biased. They like to go down. We understand sharp angles reflect. We understand a lot of rules that keeps us ahead of the pack. I hope you found this content useful. Everything I do for you is free. Please be aware of scammers. I do these videos to assist you to be more of a financial blessing to yourself and those you love. Please say hi and let me know where you are viewing from. And if you have any questions, we have YouTube, Discord, Facebook, and Twitter, and you can reach out to me directly at any stage. If you'd like something else covered here that you feel has been missed in the video, please let me know. I always do my absolute best. I tend to get maybe about 400 queries a day. I do my best to answer them all, but I can't, of course, answer them all because they belong in different segments and some belong in special episodes and a variety of different things. But I really take every comment very seriously. I want to help you out as much as I can. Please remember that crypto is volatile. Always prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.